Hey everyone, welcome back to Nadlin Forum Podcast Daily. I'm Ruby Sturt, and wow, today we're talking about something I feel like everyone's quietly stressing about: homeowners insurance. I mean, it's wild. A new Realtor.com survey found that, get this, 42% of folks have actually seen their insurance premiums go up, and nearly 90% think it's only going to get worse. That's a lot of people feeling anxious before they even get to the mortgage, right?
Yeah, and it doesn't stop there. I was looking at the numbers too, and almost 3/4 of homeowners, they're genuinely worried that insurance could become so expensive, it's like impossible to even keep. It's not just the older crowd either. Younger buyers, especially Gen Z, they're feeling the squeeze the most. I mean, if you're getting into your first home and insurance is suddenly taking a giant bite out of your budget, what do you even do?
Exactly. And here's the kicker. 76% of buyers with a mortgage said they would actually consider skipping insurance if it keeps climbing. Like, I get it. Insurance is generally required with a mortgage, but people feel trapped, you know? This isn't just a California or Florida thing either. People are worried coast to coast. It honestly reminds me of the time I was trying to get rental insurance back home in Australia during bushfire season in 2019. Insurance companies basically laugh at you, or they give you a quote that makes your eyes water. Where was I going with this? Oh, right. The risk factor, like it makes you wonder if having insurance is even realistic anymore, especially in risky locations.
No, you're spot on. We're hearing from so many people, especially first-time buyers just trying to get by, but they can't find coverage, or the policy doubles overnight. They're forced to rethink their plans. Gen Z, they're doing that the most. Like 30% said they changed their whole strategy because of the insurance situation, which I gotta say is much higher than older generations. For baby boomers, it's less than 6% making those big changes.
And it's not even just about risk tolerance, is it? It's also about who can actually keep up. At some point, the numbers just don't add up. Anyway, I reckon that perfectly sets up this next bit: how these insurance costs are changing, where and how everyone's even shopping for homes, not just if they're shopping.
So, here's what's interesting. About a third of buyers are changing their home search locations entirely because of insurance issues. That's huge. It's not just a couple of people moving farther out to the suburbs. This is like big migration patterns starting to shift. And if you look at the data, it's Gen Z and Gen X who are most willing to expand their search radius to find somewhere insurable, or at least more affordable when it comes to getting that policy.
That's massive. And you know, only about 26% of homes in the whole US are even considered severe risk for climate: the fires, the floods, the endless hurricane season. But those homes, they carry way higher insurance price tags. Miami, for example, averages about 3.7% of the home's value every year just for insurance. That is wild. Like, imagine having to plan your whole move around a figure like that. That could be the difference between being able to afford your dream home or not even trying.
And you get these trade-offs, right? Some people decide, okay, I'll look further out, maybe ignore my top neighborhood to save a bit on insurance. Others, especially with families, sometimes just roll the dice and stay put, but maybe cut back on coverage, hoping nothing happens. But honestly, should we really be telling buyers to avoid risky areas? A lot of those spots are desirable for a reason. It's not just about the risk, it's about quality of life, amenities, jobs, all of that.
Totally. And I mean, if everyone avoids the so-called high-risk places, aren't we just making those communities more vulnerable or even unaffordable for anyone left behind? At the same time, I see why people are choosing wider search areas or dropping certain locations to make insurance work. Where do you draw the line, pay through the nose, or keep moving till you find something you can actually insure without having to make instant noodles for every meal?
Exactly. And that brings us to the next problem. Even with all this stress, most buyers still aren't really checking disaster risk at all. Let's dive into why that matters and what it might mean for affordability and the whole market long term.
So, here's the weird thing. Even though coverage keeps getting more expensive, only about 30% of people are actually bothering to check for things like flood zones, wildfire risk, or whether their future neighborhood has been hit before. I mean, 44% say they plan to, but that means most still aren't. I don't know, is that just optimism, or are we a bit in denial?
I've seen it firsthand. Sometimes buyers don't want to know. Or maybe they think it won't be a problem for them. But what ends up happening? They get blindsided. I work with Nedland Capital clients in Florida who had to switch insurance providers twice in the same year. One company just left the state. Another bumped the premium by 40% overnight. That's putting some serious pressure on affordability, not just on the monthly budget, but on the whole mortgage process. Suddenly, a deal that worked at closing looks completely different just months later. That uncertainty is bad for everyone, the buyer, the lender, even the community.
That's it. If insurance keeps going up and people keep skipping the disaster check, we could actually see a bigger affordability crisis brewing. First, people stretch for the mortgage, then the insurance gets out of hand, and poof, suddenly owning a home isn't any more stable than renting. I feel like in the last few episodes, we just talked about inflation, unusual property fees, right? All these little costs stacking up until something has to give.
Yeah, and there's no magic fix. I mean, buyers can start to shop smarter. Think about expanding their search, get really creative with locations. Sometimes just being realistic about those premiums and budgeting for higher out-of-pocket costs is the only solution. Whether insurers adapt or new products show up, the challenge right now is just bracing for higher costs and being ready to pivot.
All right, so I reckon that wraps it for today on insurance and the hidden anxieties swirling around the housing market. But absolutely, this topic is going to keep popping up, especially as markets and risks change. Leo, thanks as always for your stories and your unique optimism. Appreciate it.
Thank you, Ruby. And thank you everyone for tuning in. Keep your wits about you when it comes to insurance and join us next time for more Nadland Forum Podcast Daily. Ruby, see you soon.
See you, Leo. Bye, everyone. Catch you in the next episode.